We have with us Mr. Harin Kanani, the MD at Neogen Chemicals, joining us on the show now. Harin, hi, thank you so much for making time and speaking with us. Well, despite an improvement in the product mix towards value-added products, your margins continue to stay a bit under pressure, and the gross margin, if I have it right, was around 40%. Could you talk to us about what the margin profile is likely to be in the coming year? What are the various factors which is impacting the performance?
Hi, thanks for having me here. So, Neogen has been performing consistently last 3 to 4 years at EBITDA margins between 18 to 19%. And the main variable in last year was that the lithium prices had reached historical highs. So about 20% of our revenue comes from lithium prices, and that's the reason why. So the top line that you are seeing, so we had almost a 40% growth in our top line, but a part of that, the guidance for us was actually 600 crore, against which we did 686 crore. So the remaining 75 crore odd amount was only because of the higher lithium prices. And this is something, when lithium had gone historically high, which is 6 times, 7 times its long time average, we were able to pass on the price increase to our customer, and our absolute EBITDA was protected. So if you look, the absolute EBITDA for the year increased almost 30% to 112 crores, against our guidance was somewhere between 100 to 110 crores. So in our view, the absolute margins are protected. It's only the percentage margin looks a bit down. That's because of the higher lithium prices. And going forward also, this is what we have guided, that on a stable lithium price, we will continue to have between 18-19% kind of EBITDA margins. And we are also expecting 25 to 30% growth in our EBITDA also in the coming years based on our actual performance. Now, lithium prices have cooled off a bit since February, March, and they reached their low point in the last 2 years during April. So we feel that with that, depending on how the lithium performs, so next 2 years is going to be very volatile for lithium as the world is moving towards EV and higher electrification and low carbon kind of options. So therefore, the margins will be in that range of between 16 to 19%, depending on where the lithium price is. But the absolute margins are likely to grow 25 to 30% as we have given guidance earlier.
Harin, your current revenue run rate on an annual basis is around 800 crore, right? You've done 204 this time round. I want to understand, this recent association which you've done with the Japanese company Mitsubishi regarding manufacturing here back home. I want to understand how much can this take your total revenue potential in the next 2 to 3 years. I don't want to look at immediate quarter to quarter for next 2-3 quarters. That's your legacy business. The next gen Neogen, 3 year far out, are you looking at breaking out into 1200 crore plus or 1500 crore, that kind of number in revenue?
Yeah, so I think, we've already guided that our regular business keeps growing at, 20-25% kind of growth rate. And as you said, by FY26, we have already given a guidance of somewhere around 1000 crore plus. And over 3 years, it will be somewhere around 1200 crores. But what we feel like once India starts making cells from scratch, which is expected to happen by end of this, around nearby December 2024, 1 quarter here or there. So FY25 and FY26 is where you will see a big jump in the demand for the electrolyte business, for which we have a tie-up. So we have already guided for a revenue of additional 1000 to 1200. So what is going to be our legacy business, let's say 3 years down the line, almost same order of magnitude. By FY26 or FY27, we expect the lithium battery materials for EV likely to be. So FY26 is going to be that year in which you'll see a significant jump. Of course, before that, we are setting up a smaller facility, and it will start contributing, let's say, from the second half of this year by sale of electrolyte salts and maybe some trial volumes. But the big jump on the battery business, especially through our subsidiary Neogen Ionics, what we have created, will be in FY25 and FY26. 26 is a main year where
Harin, can I just interrupt you over here? Did you say 1000 crore additional revenue potential? So you're doing 800 now, 1000 on top of that in the next 3-4 years.
Yeah, so our guidance is that the existing business 800 crore will reach 1000 crore by FY25 or FY26, and by FY27 it should be somewhere close to 1100 to 1200. And in parallel, we are expecting another 1,000 to 1,200. So the total revenue can be almost 2,000 to 2,200 by, let's say, FY26, FY27.
Okay, so that makes, and if I take conservatively 20% EBITDA on that, 22 crore, is that a fair estimate to make? Around 20% on
Yes.
that in 4 years' time, 3
So
to 4
our
years' time.
guidance is, 18.5% plus or minus 1%
Okay.
in that range on a on a stable lithium prices. Again, lithium prices can be up and down, but at least that's a base which we should be able to protect.
Harin, just before I let you go, wanted your take regarding the
Sure.
export potential. What do you expect the contribution to go up? And with respect to the capex plans, what's lined up in the next 12 months?
So, in terms of capex, we already completed our non-battery lithium capex ahead of schedule in March. We are also increasing our organic capacity, which almost 50% is done, and the remaining 50% will be done by September. So that will complete our organic as well as inorganic capex in our regular business. We also just recently completed acquisition of a company called Bulychem. So even that capex work has been done. Now, the main capex, at least what has been planned out, is first our battery material business is going to start, and this is expected to get done between June and September. So our battery material business revenues, the trial production will start, and then there is a 450 crore larger capex which we had originally planned, which we may revise based upon the Mitsubishi agreement. But that 450 crore capex was planned over next 2 years for the lithium ion battery materials division. And of course, beyond FY 25-26, in our regular business, we already have a capex, but we may think of a capex for further growth beyond 1,000 crores in our regular business, let's say by FY 25 or FY 26.
Okay, we'll let you go on that note. Really appreciate you joining us and
Thank you.
talking to us about the prospects of the business. But